pretty big. All hail our new leader, Rishi Sunak. He's been sworn in. He's met with King Charles earlier on today, and it's started on a slightly better footing than Liz Truss managed. The first couple of words that King Charles said to Liz Truss were, "Oh dear, oh dear." So hopefully the fact that things were a little bit smoother from what we understand on their meeting, maybe King Charles has a little bit of an inside scoop as to how this will go. So Rishi, yeah, let's start at the beginning. We are on the 25th of October 2022, Tuesday. Markets tend to get a little bit tasty this time of the week, so things should hopefully be in full swing. Not that we need too much more in terms of volatility. There is plenty out there any day of the week that you look at the moment. So we'll have a little recap on what happened this morning and kind of a bit of a dichotomy between the bond and stock prices a little bit today, which has since more recently in the last half an hour or so I've kind of got themselves back in line. But let's have a little run through the news first. Yeah, Rishi Sunak has come out and said he will place the economic stability at the heart of his agenda, which I'm sure will be well received by the nation, given what's happened before. But we have seen some resignations. Jacob Rees-Mogg, the Tory ghost, is resigning as business secretary, and he wasn't expecting to be in the cabinet, having called Rishi a socialist in the past. So he's stepped down. There'll be a few more. There's a few more who Jake Berry's gone. There's a handful more lesser known ministers who hung up their gloves for this one, and we'll find out more today about who Rishi wants in his cabinet. We should know that this afternoon. That will make for interesting reading. He should know what he's doing with appointing a chancellor, at least, having done the job himself very recently. Other news: we've had in the Ukraine crisis, the US is considering the Hawk air defense equipment to be sent over to the Ukraine to help them deal with these missiles that are being thrown onto their cities and damaging their power grids. The People's Bank of China, they're obviously rumored to be out overnight. There was that big move in the dollar yuan, and they are looking to study measures to support the weak economy. So perhaps there'll be potential stimulus and maybe unusual stimulus, because they have reshuffled their cabinet in the last week or so, and they've got some pretty unusual candidates in place over there, very much puppets for Xi Jinping's regime. So whether they have the nous and wherewithal to do the right thing, or if it's just a case of more helicopter money, we shall see. But yeah, watch the space with that one, because I think there's plenty of action going on with China at the moment. You might want to be paying close attention to what they do, with Taiwan clearly in their sights over the next few months, it appears. The Coca-Cola executive was out earlier. They're seeing some changes in consumer behavior this year, and we'll know a little bit more about this as we go forward. So I've actually flicked through to where we are with the earnings season, and we'll know a lot more from some of the bigger dogs. So obviously we have a lot going on with the earnings this week. This is the biggest week of the cycle. So obviously every 3 months we get reporting from the big businesses in the US. And yeah, this week we have the biggest of them all. We've got Apple and Amazon are out on Thursday night, but tonight is not a small fry either. I mean, that's over 20% of the Nasdaq on Thursday night. But if you just add in Microsoft and the two Google tickers here, that represents about 18%, and that's both out this evening. The expected time, these aren't always totally accurate, so just make sure you've got both the Google and the Microsoft charts open. I think I showed this earlier on the morning Zoom, but just to reiterate, if we go to say, let's do this here. Let's jump in on Microsoft here. You need to make sure you have your extended trading hours selected. So if you go to the settings on TradingView, you will see here that the session, if you just have the regular trading hours, you're only going to get your 2:30 till 9 p.m. trade. That won't be any good for you to understand exactly where this is going. After hours, you need to click on your session extended trading hours, and it will give you the additional trading that we're having in the yellow in the pre-market and in the blue in the aftermarket. And given that all these releases are done for the tech stuff after the market, and for the broader market, a lot of it's done before the market opens. You need to have these open to get a real gauge on which direction these things are going. So I'll be watching the Microsoft one with interest. That is the bigger of the two. But yeah, there's also been reports from the Wall Street Journal that they're expecting kind of weaker numbers from both Google and Microsoft today. So we'll see what happens there. But we've got the earnings per share at 1.25 on Google, $2.29 on Microsoft. Let's see how they compare when we get through the close tonight. So there'll be a busy office in here, I'm sure, tonight. These can often move the markets quite a lot. This week is the big one, so let's focus on the big moves today. The other things that we've got coming up: consumer confidence out of the US. So this is a market. This is a mover of the market. Recently, we had a couple of decent, or initially quite weak numbers. If we look historically, in fact, if I bring up the investing.com's got a slightly better data history. You can see here we had that first initial move in June. I remember this one very well. It was the first time we'd read sub 100 in an awful long time, and we had a pretty monumental sell-off. It wasn't the sort of sell-offs that we've seen on CPI when it's just kind of wicked down 400 ticks on the Nasdaq. This was just a managed decline through the day, but it was literally, you could have sold it basically at any 5-minute candle, and it rarely managed to reclaim any of them throughout the day. Ended up closing at the low of the day as well. So if we do get another weak number, they have started to pick up a little bit. Investor confidence has started, and consumer confidence has started to pick up a bit in recent weeks. But obviously, with interest rates going up in the US, I know the housing market is one to watch in America at the moment. I know new builders in the US are starting to discount their housing inventory. I think there was the previous month, I think 19% of home builders had reported that they had cut asking prices. Now, as of this month, it's 25%. So we are starting to see a little bit of weakness there. Perhaps that's based on the fact that consumers aren't able to get the 30-year fixed rates that they often get in the US done at a reasonable price, because obviously their rates are much higher than they have been. So yeah, this is one to watch. The average miss over the last 6 months has been about 2.5. So with the forecast being 106.5 here, yeah, I'm looking at north of 109s or south of 104s before I look to trade. So let's have a look and see what we get. But yeah, hopefully we can get a big number to get things moving. But if not, then powder may well be kept dry until later on this evening. But yeah, there's plenty more to get your teeth into this week. I know we're not back on YouTube until Thursday afternoon. Between now and then, we've got the Bank of Canada out. We have some new home sales actually, which will be interesting tomorrow at 3 o'clock, but probably all eyes on the BOC at 3 p.m. If we do start to see slightly dovish moves coming through, is there the chance of a pivot coming? We shall see. But yeah, if we do start to see slightly less aggressive moves, we're expecting 0.75 increase in the Bank of Canada. Maybe they'll see a little bit less of that. And we won't be back with you on YouTube until after the ECB have been out with their rate decisions as well, and have their press conference actually on Thursday. And they're obviously expecting a 0.75 increase, 2% themselves. This is also at the same time we're getting US GDP. So plenty to get your teeth into. And then obviously we'll go through the BOJ and some of the PCE stuff with you on Thursday's YouTube. Let's look back on what happened earlier. We had some decent moves on the DAX earlier, which I want to talk to you about. Got an initial kind of pop on the open, rallied up towards the value high for the week. But then this IFO data came in slightly stronger than expected with an initial pop. But then the weakness kind of came through as we're expecting recessions into the end of the year. So a nice kind of value area range trade on the week there for the DAX. But as we see here, we've had quite an aggressive turnaround in the last hour or so. And if you flick over to the bond market, this is where there's been a bit of a dichotomy today. I mentioned this at the start. We've seen pretty much from 7 o'clock this morning, that was the low on the bunds. We've been rallying more or less. I mean, it was pretty rangy, I guess, until 10:30. But then we started to push a little bit higher. But this wasn't met with stronger stocks, which it often is. There's normally quite a direct correlation between bond prices and stock prices at the moment. And often the bond market tends to lead stocks quite nicely. So this is was telegraphing to me that there was likely to be a turn at some stage in stock pricing. And eventually it took really this powerful move that we had after 1:30 today. And that was really the low. The end of that time print, just after at 1:35 was the low on the DAX. And yeah, same as the low on the Euro stocks before we had this nice rally higher since then. And we've had a nice pop higher in the bunds as well. Just to measure this, we're up over 100 ticks in the last hour on the DAX. So undoing some of the weakness we saw earlier in the day, likely to be dominant as we go through the rest of today as well, focusing more on the US markets. So yeah, the Nasdaq's the one that's looking pretty tasty here. If we look at the relative gains for the day, Euro stocks is up 0.2 with DAX being down 0.2. The FTSE struggling, not loving the Sunak perhaps early doors. Maybe that's more of a function of the strength in the pound. Obviously, there's an inverse correlation between pound and the FTSE, quite often due to the fact that a lot of the participants, or the constituents, should I say, of the FTSE 100 are resource companies and they earn in dollars. So the stronger the pound becomes relative to the dollar, the less earnings they're going to be getting. And that's why you often see this inverse correlation between the FTSE and the cable rate. But yeah, looking at the US markets, we're seeing the Nasdaq on the strong footing, and we'll watch the open as we go forward. That's at 0.5%, with Dow down 0.1, and the S&P pretty much flat on the day. So let's see what the open has. But as we focus closely on the bond market, pretty nice moves over the last 5 minutes, even in the US 10-year. So that's probably what's catalyzed this little spike to the upside on the Nasdaq as well. The German bond market's just touched an interesting level, which I'll maybe have a flick towards if we get an opportunity to. But yeah, that's pretty much straight out of the gate there. Aggressive buying, given this move in the bond market. That is not a surprise to see. Already up a nice 20 ticks on the Nasdaq in the first 30 seconds. S&P's also on a positive footing. Just 7 or 8 ticks in the same time frame. Dow a little bit more sluggish from the open. We're only up 20, 25 ticks so far. So really the Nasdaq is the one that is currently outperforming. This is the most sensitive, the Nasdaq, to interest rates. So as you see the bond market being either rallying aggressively or selling off aggressively, you tend to get more volatility and more significant moves in the Nasdaq than you would do in the S&P 500 or the Dow. So if you are wanting to get a little bit more bang for your buck, perhaps the Nasdaq is one to look at if you are basing it on moves within the bond yields. So yeah, as we see the bonds start to ease back, we see a little bit of a rejection from a level. I have marked up here an old quarterly volume level, but it doesn't look like it's going to stand too much in the way if these are pushing this aggressively on the bonds, on the US 10-year, should I say. Also, while we've got you on here, I want to talk to you about the dollar yen, because this is something that's been really fascinating in recent days and weeks, and we're starting to see big selling in the dollar yen again. And we're off in the last hour or so. This is more of a dollar story. It doesn't look like intervention in the same way. If we take a look at my risk screen, I'll bring this over here, which will bring bear with me. Where's my risk screen? As you see here, that for the dollar index, we are actually seeing this similar puke happen in the dollar. It's not just a dollar yen story. So this puke in the dollar from 112s to not far off 111s, down a whole big figure in the last half an hour or so, is really what's catalyzing this move in the dollar yen. What we've normally seen is more spike moves. So this one yesterday, for example, around 12.45, we had a nice one big figure taken off it quite quickly and snapped back. But this very much seems like a dollar yen or a dollar move rather than potentially a yen move, which is why you're seeing kind of the inverse moves in cable, for example, and a nice move on cable to the upside. Haven't seen these levels for a while actually on cable. Where are we? Since the budget, I would say. We were up at 114, in the 114 handle then. So yeah, we've got a lot to do to kind of get this shake. Oh no, this is the budget here. So we have been up into the higher 114s, near 115. I've got some levels marked up just north of this. This might be quite nice for a little stop run above here. I'm not overly bullish cable yet. I think the dollar maybe has a little bit more left in it to the upside, but definitely a day for soft dollar plays. And that's been emphasized by this big selling that we're seeing in the dollar yen, but a bit more rational, you would say, than the selling that we had on Friday, where it was just puking off a cliff. And we're not seeing the same sort of volumes yet that we had at that time. I mean, it's dwarfed the volumes that we've seen, albeit we're only half an hour or halfway through this candle. You'd expect your volumes maybe to be double this, nowhere near the size of the big selling that we had at 4 o'clock on Friday afternoon. So yeah, I'll leave it with you. There's plenty to get our teeth into for the rest of the day. Leaving you with indices not too far. Yeah, highs of the session on the S&P and the Dow playing catch up, and the S&P still pushing through that level. So yeah, pretty bullish start to the day. Those bond yields perhaps giving you that guide for the open. So yeah, have a good day trading. See if you can get on some of these moves this afternoon. The earnings season is something you don't get to trade all the time. So if you haven't traded it before, even on a demo account, give it a go. This is something you might want to add into your armory. At 4:05 Eastern Time, 9:05 UK, and same time we're expecting Microsoft. Often these are out about 5 minutes apart, so I'd have both charts up at the same time and see if you can catch some action on either of the indices, of which the Nasdaq would be my preferred choice, with it being the biggest weight. So yeah, trade smart. Plenty going on, and we'll catch up with you on Zoom in the morning.